Hello traders, this is Alex Andreessen with the StockMatrix program. I've got one update. We had a new trade put on Friday, and that was Procter Gamble. PG is a symbol. Again, we have 17 of these select stocks. A lot of them are traded by, the big dogs like BlackRock and whatnot. But anyway, Procter Gamble went short today, and we'll take a look at that here briefly. Nothing else really to report on the trades. It's been our first trade, only one trade the whole week, which was strange, which is good, right? Because the trends are moving in the direction. Looking at the statistical page, here are the annuals that came in basically Friday and Monday. I put on here. Well, they're highlighted on here. Nvidia, Amazon, Apple, BK, and JP Morgan, and Cintas. Those all had annuals coming in, and there's actually two on JP Morgan, so that's pretty interesting. And it had some activity. It made a new high Friday, one of the three that made a new high. And again, 855. Friday was 856, but 855 is a GAN number that I follow. I pulled up my page, my cheat sheet that I use for the 45s, basically cyclical cycles of 45, 45, 91, 35, and it repeats down here, and these are the multiples of it. I can cheat with that, but you can see we had 225 on Microsoft, which again off the high, so pretty interesting. And then we had we had several around this 855 number, which is right here, and then we had one with 1172 that came. 1171 had been yesterday, but again, so it's kind of important to me. I keep track of that. If I'm trying to cheat the system or something in particular, or if I missed it, it gives me an opportunity to use this data for my advantage, or to be cautious. If I don't have quite the money to trade, I might take profits if I'm long something. Some of these have been in the position for quite a while. Let me see. Here's one from December 8th. Most of them have been fairly recent. Meta is the only one that's been long since prior to our actual program implementation, which was January 6th. So pretty important. But so everything else has gotten spun. Now let me take a look at that real quick. Flipping to our bar chart thing. Here is the Greeks, the capitalization, annual income, that kind of thing. Then a chart that they have. And again, the option price is what we use. But let's go to the portfolio. Again, that's free. You can do one portfolio. If you want to do multiples, you have to pay. It's a good service. I'm not trying to advertise for them, but again, we have $8,900 worth of losses, so we have yet to take a profit one off the table since January 6th. Now, January 6th happened to be the low ebb and high ebb, right where we got in, which happens, right? That's why you don't take anything granted for the first year or the first months. But we got 14 grand made now, so the long-term ones are still now profitable. There's a few that are still losses, but pretty much everything is doing good for what we got in. I'm going to take a quick look at Meta on our option that we've had on for a while. It's got $11,000 worth of value. We're profitable $6,000, so you must have spent $5,000 for it. But let's look at the take a look at the trade sheet that I have. Again, we don't trade the actual stocks, but I got to keep track of these. And again, I don't normally put this out, but again, we would have been making $13,617 if we had bought 100 shares of that stock instead of the option, which was $6 grand, right? So we left $5 grand off the table. Now, of course, the losses would be much larger too. So the advantage of the option, and the disadvantage is you don't make as much, but your output is less too, right? You'd have $73,000 of actual stock tied up. Well, let me see, where'd we go long? We went long at 600. So that'd be 60 grand you'd have had tied up versus the 5 grand or whatever we have tied up in the actual option. So pretty key there, right? All right, doing some quick math on the Meta percentage-wise. Now that's a little deceptive, but everybody seems to like percentages. If you'd have bought the 100 shares of Meta stock at $60,050, it's currently worth $73,667. Again, adding that to that, right? That's a percentage increase as of Friday of 23%. Now, if you did the options, you've got the options. That Meta option is, we spent $5,100 for it, and it's worth $11,145. That's an increase of 117%. So again, percentage-wise, you made a hell of a lot more money. Now, even though we made less total, if you'd have bought the shares. Now, again, this will stay the same if it goes up a bunch. So again, it doesn't really matter till you get out, right? But again, it's kind of important to understand percentages for people who like percentages, right? They do a lot of their business based on percentages. Let's take a look at my stock matrix chart on Procter Gamble. You can see we had a bump up against the solar eclipse, uh, and the stop was here originally, and now we flipped down because it did go down and just nick us out, filled the gap. Did not fill the close in my chart yet. But again, you can see pretty interesting trade. Here's the one-to-one coming off the high. So definitely failed this resistance. This whole deal will just don't make me feel good, right? I mean, we got stopped into the position. This market should have tore ass up here, right? It shouldn't have just dicked around. So again, maybe a little concerned that something was, bad going to happen. I like the set of threes. So if we can get a low in here, or it doesn't have to go down that far, but just a spike low, kind of similar to these, kind of more of a longer term setup. Now, if it makes a new low and then closes below it, got to be a little cautious, right? So, but here's the chart definitely is a little iffy on my Procter & Gamble. Now let's take a look at the actual futures chart. And you can see the annuals that I put in really had nothing in here for the last month. Again, this is that solar eclipse. We kind of almost hit it on this chart on the daily. Now we did hit it on my stock matrix program chart. So pretty close, good enough. And you can see that we had some definite double up here, and that caused this low. Again, here's that January 6th where we got short or right here, because again, it just had to pick the date and go with the trend. Well, that was an absolute low, so our first trade was a loser, which makes sense. Again, that's how a lot of these charts are. But I also plotted up here for key information the high, which was November 27th, right up here. And again, let's take a look and see how that performed. Here's the 27th, which was this high. Again, this is a Gann thing. This 27th was a high, and the 27th, the next one's unknown. Let's look at the previous 27th and see if it did anything. It was also this little blip high before the pound. Let's look over at this one. This one was also kind of in the consolidation before the pound. So again, the 27th, this was a consolidation before the up. The 27th, even prior to this high, were pretty important. So again, keep that in the back of your mind as we approach the 27th next, I don't know, it'll be next 2 weeks from now on the thing. Let's look at, let's squish this down a little bit. You can see that the low that we had was the COVID kind of low, October 7th. Again, you can go through all your charts and see what October 7th did, or all the 7ths. This one was the 8th is right there. There's the 7th. It was in the low here. Let's see. And again, that's just simple chart stuff, right? And you can see that this one, again, had pretty good alignment. And you can see that this trend line is drawn in here, which is not mathematical, just a simple trend line. You can see that we hit that here and close back on it. Again, potential bottoming, right? Again, this whole thing is just a sideways chop, a big one. But now if it breaks through this, that doesn't look good. It'll have a similarity to this move here, right? Let me draw in the simple trend line and then duplicate it. Again, I'm giving you kind of a quick chart deal. I could talk charts all day. That's my forte. There's your parallel channel, right? Exact same speed down, not percentage down, but speed and price points that project a low May 20th at 138. And this is the speed from this corrective move. So definitely a possibility, right? I mean, we're kind of on that trajectory. So keep that in mind. I'm not saying you trade off that, but you don't buy, if you're bull, right, you don't buy the breakouts. You might have to buy the dips, right? You don't buy strength, you buy weakness. Just by knowing this in the back, if you're bullish, right? If you got to be long. And most people never go short stocks. Again, I come from the commodity world. I went short and made most of my money on puts in my option programs because no one else did. And that's the same way with stocks. Anyway, let's take a look real quick since we got this up. Here's a weekly chart. And you can see that, new all-time highs. Again, we've had new all-times here, finally here. New all-time highs do have a corrective mode. Now, eventually we'll have a bear, right? This is a bull market, man. Let's go to a monthly and you get a little more better tone. Again, bear market here. That's the first time we made new lows and broke the trend, which was, over 50% break, right? So did not break the swing here, and it was a buy of the century. So anyway, that's kind of how we're looking. Let me just do one more chart because I'm curious myself. Here is the annual, the yearly chart. The only time we made new yearly lows were the ugly years, and it did not close bad. This one, it closed mid-range. The next year it did knock it out, but closed back up there, right? So again, once you make new yearly highs, you got to go with it. I'm just looking at this for my first time myself. Again, new yearly lows did not close in new lows. You don't buy it there though, but you buy new yearly highs. simple chart stuff. This is an outside year, so you kind of on both sides, but making new annual highs or annual lows. Now we didn't do that, but it did go up. So again, we haven't made new yearly lows since 2018. Century. Again, Procter Gamble has a lot of products, a little more stable. Procter Gamble is one of those that are super stable, and they are a go-to if the market gets a little weird. They bail. A lot of these stock guys bail on their stuff, and of course that's why BlackRock and all these big dogs, buy Procter Gamble, right? Because they need that security, and they make it go up or they make it go down. They might say, we need to buy more Procter Gamble. Let's push this market down. So they sell some of their stock. Poof, the market goes down. They don't have a mandate like a fund does to stay in their positions. Now, some long-term long funds, they have to be mandated, and the only way they get short or get out of their longs is to people have to sell their stocks, right? Well, BlackRock's not that way. They can sell it if they want to, just to cause the break, because they control, I'm guessing, between the top three dogs, probably half of the stock shares in this company. Okay, I'm going to sign off. Thanks for listening. Again, I could talk charts all day. You have a great weekend and a profitable next week.